All right. Follow up from Tuesday, I believe. Right, nothing's changed. Nothing has changed, right? Especially because price has already sustained itself below the significant low, which is essentially target one of our high low retracement. So as we are essentially continuing structure, this is the first time here that we actually break any type of structural level here, meaning this is now a solidified low, this is my solidified high. And in terms of a premium discount, we just reacted this morning from a premium, right? And this premium is actually derived from our daily inefficiency, right? It's, in my opinion, sometimes it's very hard to play inefficiencies, but it's cool to acknowledge them as a confluence. So we have confluence number one, which is the daily inefficiency. We have confluence, and as we pretty much go through the time frames, I don't remember exactly what time frame it was, but I believe it was H2. No, it wasn't H2, it was H8. Well, there was pretty much a second inefficiency that I saw in here. Maybe H1. Who knows? But anyways, right, there we go, H3. H3 inefficiency is where we bounced, but what I care more to see about it, or what I care more to see, is the reaction that happens because of this move, right? Just because we have a continuation BOS, we have to acknowledge that this move is counter trend, right? Any sell here is a counter trend, but it is a good short to medium term move, as I'm sure a lot of you caught. Me personally, like I said, I don't want to sell this, and I mean, now you guys are seeing why. But I won't hesitate to buy when I do see any type of reaction. So now that we're coming up to EURUSD, right, keep in mind we have just cleared a very significant high, and this is, hold on 1 second. Okay, just letting somebody in. And this is right now our low to our high, because we finally broke structure. This is now a solidified high, solidified low, and once again we're in a premium, I mean discount, I'm sorry, we're once again in a discount. So right, what am I gonna do once we start coming into this time frame? So here's the thing, here's the confusing part. The confusing part is that there is a wick here that caused the move to the upside, and there's also a very big inefficiency, right? So I don't necessarily care too much about this box. I could have even made the box here, but I want to acknowledge what happens inside of the box in order to make any type of decision. So what do we see here as well? Right, efficient, inefficient, efficient, inefficient, return, continuation, but there's definitely money still sitting here. So I like this point of interest, right? This relative point of interest. But now my issue is that the price action inside of here is very sloppy. So especially as you start going into your intraday time frames, right? Looking at this is super sloppy. Everything looks efficient. There's potentially a minor inefficiency there, right? A lot of this isn't making much sense to me. So I do have the daily wick highlighted, but like I said, it's about what the reaction does at the time of whenever it is that you're trading, right? Like I always like to trade my overlap session. So we have to analyze and make a rational decision based on what is happening inside of a POI. So right, what am I seeing in terms of point of interest? Okay, that's cool. Right, something to note, right? We're obviously still bearish, right? As we're coming lower, still bearish, right? So as we're coming into the point of interest, we are obviously bearish, right? But something cool to notice is that as soon as we hit the POI, we have a very climactic action and volume, which makes a lot of sense to me as to why it's a beginning sign of a potential reversal. As soon as we see that, we obviously see, right, a type of mini reaction where you have a continuation BOS and you have a reaction from the wick, right? But this isn't the type of trade that I want to take because we're obviously still bearish, right? Hence high, low, retracement, right? But something to note here is that this is carrying a lot of volume, right? So what does that signify to me? I'm seeing a buying climax, right? Anywhere in here, I'm seeing my secondary test, and I'm seeing an automatic rally. The automatic rally is showing me an immediate sign of optimism, right, to watch out for. But at the end of the day, we have to acknowledge structure in terms of high, low, retracement, right? As you can see, that is where we bounced off again. But here is the important part. I'm not trying to take a long position here because structure is against me, right? So this is continuing lower and lower and lower, right? But here's something to note, right? The buying climax low, right, is obviously on heavy bearish volume, this entire area, right? And as we're starting to come lower, we see a decline. And as we come even lower to create a lower low, we create an even more decline. So this is showing bearish diminishment and essentially a bubble waiting to pop. So once the bubble pops, right, something to note here is that this low sustained itself above the buying climax low. So this would obviously be a secondary test phase B, right? Obviously there was no spring to LPS, right? But I'm not trying to print out a schematic. I'm trying to read price for what it is and try to make an educated decision based on it. So as we could see, the secondary test phase B per se, it pretty much creates a reaction back into a continuation of structure in the form of this inefficiency. So the inefficiency is in play, right? And this is now a high low retracement. So what happens immediately after that, we get a reaction into another inefficiency, right? This is a high risk buy because this is not enough confirmation for me to want to take this long, but it's important to acknowledge what's happening inside of the inefficiency. The inefficiency now bounces and gives you a continuation BOS by challenging this previous high. So this is now giving me a sign of this being a solidified high, this being a solidified low because of these pushes here. So it made a lot of sense for me to want to take the inefficiency, keep my SL below the unwillingness, and continue higher. Why? Because if we break this inefficiency, right, then this is now a liquidity grab based on taking this high and taking out this low. That's now a liquidity grab. You have bearish order flow in play, and you are now wanting to go lower. So because a mini structural range was formed after a reaction, keep in mind this is not disruption because we didn't break the POI, right? But it's still important to acknowledge that we came to tap it once, then we came to tap it again, and we created a new mini structural range. And because there's now because there's 1, 2, 3 taps inside of an inefficiency, that is weak order flow, right? So now this makes a whole lot of sense as to why this could go higher, because we're playing off of a daily POI, we're playing off of bearish diminishment, we're playing off of weak order flow, we're playing off of unwillingness based on the mini structural range. So this position has a lot of confluence in it, and I know that if we break, this entire idea is wrong and we're probably gonna melt. So it makes a whole lot of sense as to why a long position is ideal, right? Especially because we are playing with our higher time frame structure, right? Based on, wrong time frame. Based on low, high retracement, right? And now that we're just about to hit TP1 at the high, this is now a solidified low as soon as that is taken out. So that is now a solidified low. So we have a low, high, solidified low retracement, and naturally I do see us coming here, but now this is going to be a very important area in my opinion, because this is the counter premium to the impulse, right? So maybe this could generate a reaction that brings us a retracement, and then we come for liquidity, but who knows? But you know, I'm still bullish. I'm going to be forever bullish on this until either this breaks now, or you know, we see some type of distribution based on unwillingness, POI, you know, who knows. But for the most part, one second. But for the most part, all right, cool, got everybody in. But for the most part, this is still bullish. It makes a whole lot of sense. And as for the people that just joined, this was my execution. Right, execution is at 8:24 a.m. Right, makes a lot of sense. So in summary, for the people that just joined, right, structural range intact. Right, you have an inefficiency in play based on high, low, even though we're on diminishing volume. Right, we have a reaction, unwillingness, because we came to take the POI, I mean not the POI, we came to take the recent high out, making this a mini structural range, a microstructural range, right? And because we have 1, 2, 3 taps of the inefficiency, this is weak, weak order flow. All right, so makes all the sense in the world to me to want to take an inefficiency fill to the upside. And this is getting close to why? I know there's many conflicts, but it's not risky. Why is this risky? Why is this risky? I'm pro trend. I have a smaller time from Confluence, right? You can now say 1, 2, 3, schematic 2. Volume supporting me. This is as conservative as it gets. Not gonna lie, this is as conservative as it gets. So how is this risky? Right, ideally in a swing, right, if you're looking for a swing position, sometimes if you don't have minor intraday, major intraday confluence, right, that kind of makes it risky in terms of structure, but it actually gives you a much more bigger potential in terms of reward, because if you wait for minor, major intraday, you usually won't get a trade. You'll get a short-term trade, right? So obviously the more structural confluence you have, the better. But just because I don't have a minor intraday supporting me, right? Just because I don't have this supporting me, that's fine. Right? All I did was made sure that I had the confluence to take a position. If I have the confluence to take a position, I'll make sure I get a reaction. If I get a reaction, I can more than likely be break even. As soon as I'm break even, that's fine. You know, I don't care what happens after that. Right? Because the minor intraday is bearish. Right? But you could even see that there is a pause in price before we reverse, meaning there's something happening on smaller time frames. That's why it makes sense, right? Based on volume, based on a potential schematic 2, based on weak order flow, based on unwillingness, based on swing structure. You see what I mean? So how do you make this, how do you call this a risky trade? I don't think you can get much more confluence than you did in this position. Oh, than I did in this position. I think it's very hard to find much more confluence than what is shown. Yeah, you definitely misunderstood. I like how it's all happening at M1, not even on seconds. Yeah, bro. So primarily, I like M1. I like M30 because it's another POV of M1. But sometimes the seconds time frames aren't the best in terms of candle structure, in terms of scalp structure, isn't always the best. Yo, definitely. But momentum in terms of where? Momentum here looks pretty even to me in both directions. Like, let's actually look at the 30-second here. I don't even remember looking at the 30-second here. I see. Yeah. So all I really use 30-second for is another point of view for M1. I don't necessarily need to use 30 seconds. You suggest me analyzing seconds time frame. I do not I literally just told you stay away from M1 and M5. I'm pretty sure you know my answer to that. Yep. I like how you pointed that out. That's actually something I like to notice as well. This right here, look. This right here. I like to notice that. Why? Do you know what a curve signifies? I like how you notice that, and not a lot of people notice that. That's more of an.
I was literally about to type it. Can I say it? No. I was just like it.
Transition. But yeah, bro, Alfie's right too. That is an unwillingness too. A curve is unwillingness inside of the curve. Right? Order flow is the construction of the curve. Mitigations is the driving force of the order flow. Right? Does that make sense? But yes, Nico, please do not touch seconds time frames. Please learn the material first. Please learn the material first. I'm gonna go over that in a bit. I just want to see if you guys make sure you guys understand this. I hope this entry makes sense though. I mean, this looks like it's about to be. Ooh, hold on one second. This looks like it's about to be a pretty nice swing, if I'm being honest. Right, once we clear this high, we're lit. We are lit. Because, look at this. That is absolute porn right here. This right here. Right, Raj style. Actually, let me pull up another chart. Right, I don't think Raj is watching this, but if he is, this would be a Raj style position. That would be Raj. If you guys see his breakdown, you guys don't know what I mean. I don't know personally. Yeah, I think no lower than here is optimal. But I did take one more position. Super conservative on this one though. I did not honestly I didn't expect this to work out, in my opinion. Right, I'm gonna see if I can pull up a message. Right, Fortunato, do you mind if I show what we talked about yesterday? Yes, you mind, or no, you don't mind? All right, cool. I think. Yeah. No, but do you mind if I show it? Do you care if I show it? Yeah, I think that's a yes. I think that's a yes. I'll just go ahead and show it. It's on the screen right now. Hold on 1 second. Right here. So there was this question, right? In this case, I don't want your opinion on GU tips with the trade. I have a question with study goal. I know that after a strong impulse, the price, if comeback is the SC, rarely the structure resists and it'll break. In this case, I noted that it's easier for price to react than the inefficiency area, and born a type of reaccumulation makes sense. To catch a continuation of order flow, to come back, tends to not make obvious movements, right? As it goes into, right? So my answer to knowing when to, actually let me make this bigger, pretty much understanding how to read or find a continuation, right? I never ever, well, not ever, this is a bit subjective, but I don't ever like to really play this range here, right? Especially when we're not making a substantial new high, we're coming right back into the range. I see this as liquidity, but you also have to acknowledge that this needs to break so that we have a legitimate pullback. Because once this breaks, we now have overall low, overall high, right? And this could be, right, anywhere here, a discount. So something to note, character, efficient, inefficient, efficient, make inefficient, then go higher, right? And that's pretty much what we talked about, me and him, yesterday, right? And so I said acknowledge the characters in place, the SC under the inefficiency is my point of invalidation, meaning here, right? The change, right? That makes, and you got to think about it from a theory perspective in terms of efficient pricing, release, meaning volume is there. So if we can make an inefficient move to the downside to recover, then it makes sense as to why this will go higher. So anyways, back to, delete that. All right, coming back to this. Yeah, a discount. I'm sorry. Hopefully I didn't say premium. Yeah, I meant discount. And while you're doing it, also coming to a discount in terms of full, like, yes. And so, right, did you guys watch the GU breakdown? What did we discuss in the GU cell, this cell breakdown right here? What did we discuss here? If it comes back up, then LG. Yes. Well, yes. Yeah. I actually didn't see it like that, but yes, you're right. That means that in terms of invalidation, actually I didn't see it like that. Now that I see it, that makes sense. Right? That means that because we took liquidity out, relative equal lows, and we took out the invalidation, this is now a liquidity grab based on taking out this high as well, the overall liquidity grab. So you're now in a bullish structural range. Not to mention, you also have a very, I'm sorry, wrong button. You have a very impulsive daily closure, right? So as you can see, like, I don't mind not catching the bottom, right? I don't mind not catching here because at the moment of this, right, you are still bearish. Does that make sense? I don't mind not trying to buy here. I think this is a very high risk buy that can provide to you very big R, but a lot less in terms of a lot smaller of probability, if that makes sense. So I care more to see this show its hand than have the character show itself, right? Where I said, this is my invalidation, right? So I care more to see what happens down here. I slacked on this. I could have got such a way better entry. I was just so much more focused on EU. You can see it's the same exact time entry as the EU trade. This is the limit. I didn't get to see this play out. Yeah, I'll get there. Don't worry. Hold on 1 second. So volume wasn't telling me much, but you could always acknowledge, right? A liquidity grab of volume, I guess is the way you could look at it. You could see that there is a constant level of volume, then an increase. And as we're coming lower, we're seeing a decline, right? So I think that means something. And if we're looking at an inefficiency here in terms of high, low, right, retracement, right, we have, or we have a inefficiency right here. The inefficiency caused the reaction leading to a break to the upside, and this is showing to me a potential internal disruption, and you could even see that on smaller time frames. And as I'm looking at a potential re-entry for this to create a lower low, this is my area of interest. That makes sense, right? The wick that caused the move to the downside, that's above liquidity and has a point of invalidation up here. So the point of invalidation was hit, was met. So I just put my limit at the SC at the SC that pretty much reacted from the POI that caused this move to the upside. So although this is not a break of structure, this is a very clear sign, in my opinion, of bullishness because we have a ton of momentum, right? And we do have inefficiency right here. So I said it's okay. I'm gonna focus on EU. If I get this trade, cool. It's a big stop, not something I prefer. Even if I would have done the 50%, it would have been ideal. I honestly, I don't know why I didn't do that. It would have changed the RR completely, right? But that's fine. And if you go to 30-second, right, the final potential mitigation point here was taken out, right? Did we even take this out? Yes, we did. So actually, look at this. I didn't see this at the time, right? As you can see, we have a wick here. We have a wick here. We have the mitigation of the wick. And then we have this come up and take that out. This is disruption. So as we're looking at momentum now, we have strong move, low move. Right, so now coming back to M1, right, and even 30-second, I'm pretty sure there was an SC here too. Yeah, this is a much better SC if I'm being honest. Much better SC there. And that would have been much better RR as well. Right, yeah, it would have been 11-1 already. But yeah, that's fine. I don't really mind because it was a limit. And I was more focused on EU. And I mean, EU honestly paid out better. And I'm already scaled into here from our previous position that we talked about down over there. But yeah, it's stress when two pairs come into POI at the same time. Yeah, so I just leave a limit on one, and the other one I play it. Right, so this trade makes a lot of sense. I think Ash caught this one. I don't know how you caught this one though. I haven't looked. Is Ash on the call? Yes, he is. How did you catch your re-entry?
Can you hear me?
Yes.
Where you caught it because of the high SL, big SL, I mean. So afterwards, I waited, and as you always told that before a big move, it will mitigate at least 2 or 3 times. But here it made sense when it came here at 5-minute inefficiency, and after that it broke the structure here, and I entered.
Okay, so what time frame?
5-minute inefficiency here.
Where?
Here.
5-minute or 3-minute? I mean, there's even a 3-minute SC here. You see that?
That wick was pretty long, so I didn't consider that.
Yeah.
So after the after the inefficiency tap, I waited for the break of structure on 1 minute, and then entered on the SC on the 1 minute.
Okay, 1 second. I see. Yes. So you know what I think made your trade be successful here is this, that candle right there, the momentum shift. I think that's what clarified your position. So you took this break of structure.
Order flow, yes. According to order flow, as you always say, it made more sense because, and this became my point of this became my point of invalidation.
Yeah, that makes sense because of this. So if you break,
stop became very small.
Yeah, so if you break this, then that is internal disruption to the downside. So yeah, that's good. That's a good position. Very good position right here. 2 pips. Yeah, very good. Let's look at seconds in there. So, okay, I see this. Perfect. So this would be, so in my eyes, when I'm looking at, where is this? When I'm looking at these smaller time frames, right, on the 3-minute, I see the confluence of this final candle, the open, but I also want to see order flow. I want to see order flow. You see a random candle before we continue higher. I think that means something, right? So you could see that the wick is mitigating that wick. You can see this wick is mitigating this wick, but there's always that 50%. You see what I mean? So I'm always putting my point of validation below here. So I'm using both wicks as interest. Both wicks. Right, and as you can see, it actually came to mitigate that. And as we come into seconds time frame, right, you can see that it mitigated 50% of that candle. And this candle is also important because it's mitigating the inefficiency here. You can see that. So high to low, come back up, mitigate. Right, you mitigate, come lower, you mitigate, you bounce off of, I believe, M1 wick. M1 wick, 30-second inefficiency, I believe. 30-second inefficiency here. Right, this 30-second inefficiency leads you to break the previous POI. This is external disruption now in terms of this, in terms of this range, external. And this came back into the full M1 candle that we talked about. And yeah, that's a very nice trade. Yeah, so that's pretty much all I got for today. I didn't look at AU this morning. Good thing I did it. This looks very sloppy. This here looks very sloppy. Right, this is the one pair I didn't trade today. You guys stopped out on AU. I didn't even look at this, to be honest. This doesn't even look attractive for buys. Let's see. Oh wow, look at that. Do you remember when we talked about this? Let's see who's in here. Is what's his name in here? I remember we talked about this. Do you remember this from last week? You can see that it came perfectly. I know it was with you, Fortunato, but it was also somebody else. I think it was Zen. I don't think he's on the call today though. Let me see. Yes, I think it was Zen. So remember what we talked about with Zen. This played out perfectly. I didn't think it would play out perfectly, but you see this. And the thing is, turbulence point, mitigation, continuation. Right, remember what we said? I think it was 2 weeks. Was it last week or two? I think it was last week. I'm just saying it was last week. How we said that if we have this break of structure, that if we come up to take structure, which we did, we would continue higher and would then expect to come here. But in order to come up here, we need bullish structure. So in order to then reverse that, or not reverse that, but take a position, we would need it to transition, which if we take out all these drawings now, which it played out to the T, right, let's highlight our POI. What do we see? We see a solidified low. Well, not solidified low, but low, high into the POI, retracement, continuation, unwillingness, 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 break, liquidity grab, mitigation, full break. This is what matters, the full break. So high, low, retracement. I believe this would be in inefficiency on like what, M15? Yeah, you see that? Now we can take weekly low. Yes. Yeah. Are you in this? Are you in this right now? That was very good if you caught that. It's good to see these moves play out though. Good to see that what I say is not bullshit. Can you clear up the structure of XRP and daily? I don't trade cryptos. We'll see. Let's see. I don't trade cryptos. I'm one of those guys that doesn't have full faith in cryptos. Change of character also there, yes. 86.4, yeah. So best case, right? You come up into the inefficiency, something like that. That would be lit. Literally what happened here, I hope happens here in a smaller frame though. But yeah, it's good to see these moves play out. XRP, I don't trade XRP. And I think are they still fighting that lawsuit with the SEC? Yeah, this looks bearish still. Yeah, they're still, yeah. I mean, I've been wanting this for the longest. Where is this at? No. I've been wanting this for the longest. I've been wanting this liquidity right here to be purged. And we never got it. I was thinking we would do it here, come down, finally take liquidity, and then I would start buying. But, I mean, look at this. Going through swing structure, I'm assuming. Right? This low, high, retracement, solidified low, high, solidified high because we broke structure. This is now unwillingness based on high, low, unwillingness, break of immediate structure, retracement, bearish, major intraday, bearish, high, low, retracement, continuation, solidified high because we took this low out, solidified high. So this looks bearish. I don't see why this would be bullish outside of optimism, personal optimism. All right, does that make sense? Cool. What were you confused about here? And BTC was more clear, but yeah, XRP is messy. I do want to see this keep dying though. Like, you gotta realize, this is something I've said for like a long time. I don't think it's smart to think that cryptos will make you rich, like make everybody rich. I'm sorry, because everybody and moms is invested in cryptos. I promise you. That's not a diss to cryptos, right? I'm pretty sure there's a lot of people that cashed out here, right? But I'm thinking long term. I'm thinking longevity, because when I'm thinking cryptos, I'm thinking a digital stock. So when I'm thinking a stock, I'm thinking super long term holds. Like, for example, do you guys remember this one? This is one I'm still holding. I don't have a reason to close. Right, you remember this one? My old RCV members, I've been talking about this for over a year now, over a year and a half. Right, and we've been in since $2-3, and you know, I'm hoping for this to hit 30. You know, so when I'm thinking stock, when I'm thinking anything stock related, I'm thinking investing money I do not give a fuck for, and money I'm willing to hold forever. So if my risk for a stock is $500, the only way for me to lose that $500 is if the stock hits zero. So the risk is a lot smaller than it would be with trading, because trading, we leverage, and that's why a high RR makes a lot more sense in that type of security in comparison to like a stock, a crypto, right? I wouldn't margin trade crypto just because I think it's very, very volatile, and a 0.01 can literally make you over $100-200. I think that's insane. But yeah, I mean, I was looking at this. This was turbulence point, inefficiency fill, continuation. I didn't buy again just because I'm not going to buy at $11 when I bought at $3. Especially because I'd only be looking at 150%, whereas this position is currently 300%. Right, so in reality, like, this can provide much better return than trading, depending on how often you trade, for one, and two, how much money you put in each. Do you invest in indexes? No. No, I don't. I should though, but I don't. Like, indexes is something I could actually trade though. Like, yeah, you see, like this, if you would have been buying this for the past 6 months, for the past year, man, you remember when everybody thought this was like the start of the recession? That's why I don't want to, like, I don't want to try to guess a high. Like, for example, the Fed is either going to keep pumping money and praying, or they're going to let the stock market go to shit. You know, it's one or the other, you know? And if they let the stock market go to shit, then everything is going to just die, like, hard, right? Like, this will be nothing compared to how this dies, if they let it die. But if they keep pumping money, then maybe the solution can come in some other way. But if they keep trying to pump money, then this is going to keep going higher and higher and higher. You get what I'm saying? But yeah, do you guys have any other questions? All right, cool. We can end it off here. Yeah, recording, make sure. All right, cool. I'll see you guys. So this will probably be the shit. What the fuck?